The market continues to climb a wall of worry, with sellers failing to hold price back under the breakout points of local daily demand, keeping these buyers constructive and making space for a daily higher low. So, are sellers done, or are they just setting up for a rug pull? My name is Lamont. I've been a full-time trader for 8 years now, part of the ChartGuys team for more than half of that, where I head up our futures room and our swing report. In this video, we will cover those questions and more, so let's get into it. All right, so starting off with SPY here. Okay, so I wanted to start off talking a little bit about, what it means to climb a wall of worry. I know we talked about it already in some prior videos, but essentially it's this idea that, particularly after there's a lot of selling, what ends up happening is that people kind of get like, I don't know, like PTSD, I guess. They get affected by the damage from the selling, and so they tend to be very worried for potentially longer than they have to be, kind of like the COVID low, or like coming off of the COVID low. Many people were looking for those lower highs, worried that there would be, further shutdowns or, even more economic downturn, which didn't really shake out, right? And that was kind of what happened as well during the like 2016, 2017 era when a lot of like Chinese trade wars headlines were continually dropping, but the market would react on the day time frame, and then nothing would really come of it, and we would just keep grinding higher, of course, until COVID hit. So there are a lot of these kinds of like not accents, but like not really idioms, but expressions, very common things that traders talk about, right? And a lot of times it can be hard to translate that into something actionable. So when we're talking about specifically a climbing a wall of worry, to look at it technically, what you want to see is you want to see bad headlines, right? Headlines that should have the market react negatively, and it oftentimes does, but it doesn't create any meaningful change back down to the downside. And so if that continues to be the case, where you have negative headlines but the selling doesn't negate any kind of buying change, then that's kind of the continuing to climb the um, wall of worry that we're looking out for. So last week was affirming this thesis, right? We were talking about the potential of the market to start climbing the wall of worry after this breakout point. And last week it was looking kind of muddy because we closed um, pretty much at the breakout point, right? The Thursday, it was a short holiday week, so the Thursday close was pretty much right at that breakout point. So it was kind of hard to say, especially because the buyers failed to come back up to the low of the key daily supply zone that they need to overcome in order to really be constructive, and negate this breakdown. So it was unclear, but this week now really affirms this idea that the market is trying to climb this wall of worry, particularly because there were some bad news, specifically on Friday. And Dan pointed this out as well in our chat room. If you're interested in the chat room, link is in the description below. It's, 1,000 or so traders, many of us full time, constantly sharing news, helping each other improve, and whatnot. Again, links in the description below. So yeah, even Dano was talking about it in the chat room, that he said something along the lines of, it's been a long time since bad news has led to V-shaped recoveries, which is what we saw on Friday. On Friday there was you know what, I don't even honestly remember what the news was, but it was here. So for the majority of the morning, the open was here. We chopped around and then we started to grind higher. And this drop was very notable. It was not elevated volume. Here's where the news came out. So there's a big old volume spike. It wasn't more than the open candle, I don't think. Actually, it was. Wow, it actually was more than the 5-minute open candle. Or let's see, it's pretty much the same. So it's always notable when you have that kind of a volume spike in the middle of a session, especially when it's like around the early afternoon when people are still kind of coming back from lunch and whatnot. Talking about people in trading the New York session out of New York. So very very abnormal, right? And so that's the news reaction. But look at what the news reaction does, right? The news reaction takes us back down under the high of the opening range. So here's the opening range here, and so the news reaction takes us back under it. But you just don't really find any acceptance. We don't really need this. You don't really find much acceptance at all, and then we pop right back over it. This is again indicative of the market climbing a wall of worry, where we have this knee-jerk reaction, but it doesn't lead to any acceptance back under a breakout point. And that's essentially what happened as well on the daily time frame, right? Where we came back down under this breakout point, 525.87, spent an entire session, the entire Monday session was spent under there. And then that was really it. By the time Tuesday rolled around, this was a very notable failure for the sellers to not come down to the point of control of this key structure that we're watching, this guy, this is sitting on top of weekly demand. And so if we're going to affirm this weekly demand, of course, that keeps these buyers positioned well for a go at this July 2024 high, right? Because, well, what's the next structure above this weekly demand? It's this guy. So now these buyers and sellers are trying to resolve what we're going to do in here, right? And so what are we going to use as a reference then? It's just going to be this daily overhead supply, right? This daily overhead supply, which is exactly where the low of which is exactly where the buyers had problems getting back over on the initial breakdown. It's the high of the Trump pump move, and then the high of the day on Thursday was pretty much right there. And then on Friday, I talked about during our Friday live stream that for the Slack community, that it would not be surprising to spend some time here, right? Because this is a major level, and so there should be an area where buyers and sellers look to battle it out. And they definitely did that. Again, in the morning, there was a ton of balance. This is the morning session over here. A ton of balance fighting for that level, 546.87. You can see how price is pretty much oscillating around it. And then this higher low is pretty much a perfect backtest of the low of the key daily supply. So, if you're a day time frame operator, these are the kind of setups that I think are the juiciest, because they're day time frame setups that are based off of off of key daily levels. So you're looking at levels that are above the day time frame that people who are playing beyond the day time frame should care about as well. So if you align your day time frame trades with those higher level operators, then you have more. It's like surfing, right? It's like a big old wave. It's more the more energy that is stored in that wave. The larger the wave, the better the surfing. So yeah, and if you're interested in day time frame stuff, I had a very meaty week. So in the end of the video where we do the trade review, it's going to be very beefy. So if you're interested in day time frame stuff, stick around. I had a solid week. So this was a very notable failure for these sellers to not come down and touch the point of control again of this guy over here, which inspired these buyers to rally, and they've rallied all the way to the other side of this local daily range, and now they are testing this key supply. I'm starting to be less concerned with hedges and whatnot, and I'm starting to feel less concerned with the sells in general, like bigger picture for swings or whatnot, just because it's starting to feel like this wall of worry is the market's just really trying to climb this wall of worry. At least that's what it feels like to me right now, particularly if we continue to hold over. Ideally, if we hold over 546.87, that would definitely affirm that. Holding over, if we do break back down to 546.87, which really wouldn't be surprising because this move is straight off of the lows, the next best case scenario would be to hold over 544.28. We just really don't want to see acceptance, right? There's space for a daily higher low over 508.46 now, so we want to set that daily higher low ideally somewhere before 525.87. To revisit this level would be, that would greatly increase the potential that we're continuing to just see further balance over this demand zone and under this supply. But if these higher prices continue to attract more buyers next week, and we can find acceptance over 560.76, the point of control of this local daily supply, that's going to continue to affirm this kind of climbing the wall of worry thesis, and I'll worry even less about any hedges or sells. I know that yes, technically there is space for a weekly lower high. I understand that, but at the same time, this was a very notable failure for these sellers to not touch down on the 2022 high. Very similar to here, very similar to here. And this monthly candle is starting to look pretty strong now, right? Where you had a lot of selling essentially get wiped away. There is still 3 days left in the month. So, we don't know how this candle would shape up. Obviously, if we roll back down to the breakout point of 525.87, this candle will look very different. But, even this candle with a large body and a long tail, did eventually lead to strength. So that's how I'm looking at it right now. And again, I would not be surprised if we're spending bigger picture balance. Like if we do something like this, I really wouldn't be surprised by that at all. If we do something like this, wouldn't be surprised. Like this was a good amount of range expansion, and after a good amount of range expansion, just like over here, right over here, lots of range expansion, trade sideways, right over here, lots of range expansion, trade sideways, etc. So I wouldn't be surprised by that. But as of right now, honestly, these buyers are looking pretty good. Okay, so we shall see what next week brings. I think we had something set up for a sell. Again, I would be very, oh no, that sell had already shaken out. We were looking for a buy over here. Okay, so if you are a seller and you're looking to hedge, this is where the seller should be interested, but I'm not particularly interested in just coming into it, just scaling into it. For me personally, the day time frame stuff has been going really well. Admittedly, the swing trading has not been going so well, but the day time frame stuff has, been keeping me fine. And so I would, if I were you, I would focus on the daytime frame stuff because we have very clear levels to play off of, right? So next week, inability to hold over 560.76 or 565.16, these are reasonable sells if you're comfortable doing daytime frame stuff. If you are not, I would honestly wait for some sellers to show up here before you start looking for the potential weekly lower high, right? I know there are still folks, technically focused folks, who are looking for a potential weekly lower high under 576.41. I would not be aggressive with this. For me, I would wait to see, okay, let them press up. Ideally, they fail holding over these two key levels. Make space on the daily time frame for a lower high. Play for that lower high so that you have a nice level to play off of here. Stop is over here, and then you're playing back to the daily no change level, playing back to the 2022 high. That's how I would handle a sell. So I'm not going to set up a sell zone, but it would be off of these two levels. Again, I would wait for a little bit of weakness here and try to join the momentum rather than trying to pick a top, particularly in this kind of a market where there's a lot of headline risk. That was a lot for SPY. Let's try to run through these other tickers because, like I said, I had a pretty solid week and a lot of learnings as well. Like the gains are secondary to what I would consider far more. I think it's much more valuable, the concepts that are being affirmed through the good trading over the last week. So for the Qs, it's a very similar situation where now we're testing this daily overhead supply. Again, very similar here where the sellers broke that back down under the daily breakout point and just couldn't hold price down there. The equivalent structure, right? This guy is roughly the same as this structure in SPY, right? So it's sitting on top of weekly demand. This daily balance is sitting on top of this big old weekly demand. And so the inability for these sellers to hold under it, and then also a drop and pop at its point of control, was a very notable hold for these buyers. And now the QQQ buyers have made the most ground beyond the low of the overhead supply. So this is the key supply right now in the way. And 478.68 is going to be super, super key next week. Need acceptance over 478.68 in order to affirm this supply as demand. Doing so means that these buyers are now firmly negating this breakdown that occurred back in April 3rd. Lots of space for a daily higher low. Anything over 427.93 is going to be good for one. And next week, the key daily levels are going to be 457.33 and then 478.68. So again, if you're interested in being an aggressive seller, I would wait for the sellers to step in a bit, create some space for a lower high, and then play for that lower high rather than trying to be aggressive here because again, when it's climbing that wall of worry, it ends up sucking in a bunch of aggressive sellers that are just kind of banging their head against it. Like, don't get me wrong, I do occasionally try to play for tops and bottoms, but context is really important, and so I don't really care for that context as of right now. I don't really care to be aggressive in this current context for a sell. So I'm not going to set that zone up, and I actually would prefer buy. Like at this point, same thing for the SPY and the ES, I would prefer buys. Like if we were to, I don't like it as much as in the ES, but for the Qs, something like this I think would be pretty reasonable, looking for that potential higher low, like even all the way down here, I think. And I just prefer it in the Qs because we want the Qs to lead. So something like this, and it is showing us relative strength relative to the local daily overhead supply, again, making the most ground beyond the low of the supply. So here's the low of the supply for the ES, we're barely over it, and for the NQQQ, we're much further beyond it. So I would say something like this is pretty reasonable. I don't need that stop to be so far. Something like this, I would say, is pretty reasonable for QQQ buyers, and essentially play for a daily higher low, looking for some gap fill potential. And if they can't hold back under the beginning of the gap, if they can't hold under the daily no change level, these buyers should make another earnest attempt at trying to crack this point of control of this local overhead supply. So I think this is pretty reasonable. Yeah, I personally still have been sticking primarily to day time frame stuff. think Daniel is pretty much on the same page as well. His day trading is going better than the swings are. So for the IWM, the small caps, the rut, they're still showing a lot of relative weakness here, right? With the high of this bounce pretty much right off of the low of this supply over here. And so again, a lot of relative weakness, but at the same time, also space for a daily higher low over 180.77. And remember, this 2020 structure is super key. That's this guy over here, this fellow over here, and that's what made these lows over here, and this low over here, and these highs over here, and these lows over here. So if we find acceptance over this structure, then we should expect price action like this. So as of right now, these buyers are looking pretty good, right? You have this local daily demand, 189.05 is going to be super key. Key upside reference beyond the low of the supply, 195.49, it's going to be 200.29. 200.29, and the key downside reference is going to continue to be 190.43 and 189.05 heading into next week. So again, space for a higher low over 180.77. And if you are going to be playing for that weekly lower high, it makes the most sense to be playing for it in the rut. So over here in the rut, I think we had a sell zone that was set up from way back when that didn't hit. That's still fine. Is it this guy? This guy seems kind of aggressive. This is fine. I still think this is reasonable. Like I said, I would be a little bit more cautious, right? Because it does seem like higher prices are starting to attract buyers, and also again, this whole wall of worry thesis is looking like it's being affirmed. And so I would, again, if you're going to be aggressive, it would be the rut, but I wouldn't fault you if you want to wait for like a potential for these sellers to step in a little bit first and play for that lower high. I think this is a very reasonable environment to be a little bit more conservative with your entries, and that approach has gone well given the choppy nature of the market. So that's pretty much it. Again, space for a weekly lower high, anything under 209.27 will be good for one. And the rut, you have a lot of space for a monthly lower high as well. But this is all just bigger picture balance. So I really would not be surprised if these buyers were to look to rotate to the highs, roughly to the highs of this range, all the way up to 222 or so. Apologies if you can hear that cat toy. I guess I forgot to put it away. All right, so that's pretty much it for the indices, or we'll still have the Dow, but let's cover the Dow here. So the Dow, this strength in the Dow and this failure that we talked about last week is another reason why I'm a little bit hesitant to be an aggressive seller, because that was a very notable failure. And if you recall, we talked about how it would be very reasonable to be looking to, oh wait, I'm sorry, I tweeted that out, that this was a very notable failure and it was a very reasonable time to be booking some profits if you use the trade zone that we shared over the weekend, this guy, because again, it was a very notable failure. So I tweeted out on Monday, or I think it was Monday, that listen, if you use that trade zone over the weekend, this was a very notable failure. You should chop it up and then walk your stop up to over here. So ideally, if you watch these videos, you're also following me on Twitter so you can get these updates throughout the week, because I don't see you during the week unless you're in the chat room. Obviously, if you're in the chat room, then shouldn't have been an issue. But yeah, so at this point now, there is still space for a daily lower high under 408.02, and there's also space for a higher low over 378.35. But my point about the being less interested in aggressive sells is partially due to this failure to not come down to the highs of this structure over here, which was supportive of price throughout all of this. And now these buyers are starting to find acceptance over this fellow over here. It's very notable, right? So this breakout, the Dow negated the breakout in the most solid, in the most they made the most ground back under this daily no change level, this daily breakout point, but still couldn't hold price down. And so now we are finding acceptance back over this, affirming all of this as demand, should have us looking up at this supply over here. We can really eliminate all of this stuff. It's not as important now. It's far more, what we should care more about now is this local structure over here. So just mark it up right now, actually. I need to include this if I follow all my guidelines. All right, so these buyers should be trying to make their way back up to test the daily local supply, and the low of which is over here at 407.25. And you can see how this is where the buyers have had problems on the Trump pump, and then for this double top over here. So that should be their next objective. The key level, key upside reference is 407.25 next week. And the key downside reference is going to be 396.65. That's just the daily no change level here. So it's essentially just a back test of this. Right, so again, bigger picture, this is fine, right? Just consolidation over all of this demand would be fine. So if we just traded sideways here, bigger picture that's constructive, just like over here, same dealio, right? The 2022 selling bigger picture was still fine, right? Because we were just trading sideways over the last period where there was multiple years of balance. So this is a couple years of balance. And then now if we continue to see a couple years of balance over this couple years of balance, no problem, bigger picture. Okay. All right, so moving on to the dollar here. The dollar is really in do or die area territory here. So the fact that we bounced up and failed to get to the point of control of this guy over here, this fella, this structure over here, which has been supportive of price over here and over here and over here, very notable. And so next week, what these buyers want to get done, dollar buyers, is to hold over this low, 98.800. And that's just because it's just a basic like break with no follow through, right? If you're not going to see a break with follow through and then you move back over that level that broke that didn't see follow through it becomes super key. This is a concept that you'll see shake out time and time again. So for example, like over, like even over here, right? You break under this level, no follow through, move back over it, higher low play is there for you, higher low play is there for you, and then of course once we flip, once we break under it, flips into resistance. It's a very common play. If you think about it, it's the same situation as like an inverse head and shoulders, right? You break this low over here, no follow through, come back over it, look, play the right shoulder, you look for this level to hold, you know? So anyway, that's the idea, right? This is potentially a janky inverse head and shoulders over here. Space for a daily higher low over 97.6800. I wouldn't do anything with this right now. If you're a buyer in the dollar, I would just wait to see if these buyers can press higher over 99.800, make space for a daily higher low, and then make it so that when you come back down and test this point of control, that you would have some extension, and then I would be more interested in buying like a pass back over play. Like if you move under this point of control, no acceptance under it, and failure to touch the value area low, pass back over, buy that, chop it up, and then with the runner, just walk the stop up for the rest. So that's pretty much it. The dollar right now is in a no touch for me. And if you are still in a runner from this original trade zone from way back when, you should be out of this completely now. And if you are looking to reinitiate that as a dollar buyer, again, you just want to wait for that move higher first. Moving on to NVDA. So NVDA, you know, this trade is going swimmingly, right? And I got a lot of positive feedback. People, you know, very happy about this setup because NVDA is just a very, you know, very hot asset right now. Like I said, I'm pretty much a permable NVDA longer term. Like even if this thing drills like 80-90% or whatever, I'm like I would probably still be a buyer at that point. Just because they're just positioned so well, like they're dominating right now in regarding hardware. So it's kind of a, you know, pick and shovel play. And even if we were to trade sideways for some time, you know, I think that would be healthy, right, to take off some of this froth. So at this point now, if you're in from here, or if you're in from, you know, this, you know, I had somebody email me say, hey, I bought right at the high of the trade zone, and that worked out great. That's awesome. Kudos to y'all. I'm really, you know, I love that. So thank you guys for sharing that feedback. I don't really know anybody else on YouTube who, you know, will give you straight up everything that you need for like a trade zone. Very often they'll give you levels or whatever, but you know, so I do appreciate that those kind of sentiments. Anyway, so there's a lot of space for a daily higher low right now. Anything over 95.04 is going to be good for one. These buyers should be trying to make their way back up to 114.54. It's just the low of this supply over here, which has clearly been problematic for these buyers over here and over here on this session. But as long as you're holding over 103.65, this should be the next objective, 114.54. Again, bigger picture, this is totally healthy. And on the weekly time frame, you know, it's got this bubbling look over here, weekly higher low potentially being set if we can break over 111.92 next week. And again, I'm just looking at this as big old balance. You know, we do have to be mindful that there is still this daily supply. Like all of this supply sitting at the highs is clearly problematic for these buyers. But as of right now, you know, this idea is doing fine. And I think the chart itself, again, bigger picture, it's just really just like a quarterly bull flag that we're looking at here. The monthly lower low not seeing follow through is a pretty good look. Again, if we were to just trade sideways here, that would be fine. Earnings season is in full swing, so what the other Fangman T stocks do may affect NVDA, but again, fundamentally, I don't see anything disrupting NVDA. Like it's got to be some other technology, not a semi. Like it's definitely not going to be AMD, right? Um, it's. I mean, I guess you never know, right? But AMD kind of dropped the ball with their AI. So with their AI plays, I mean, this is just a trade zone setup for a community member. Anyway, that's pretty much it for NVDA. If you're managing a position now, ideally you've taken some profits because it's already achieved our target, and you can have your stop under this low, 95.04, and no later than this low, 86.62. Okay, all right, so that's pretty much it. Moving on to Bitcoin. So Bitcoin, if you were running this sell from way back when, at this point you should be out of it, right? Because we suggested after it came into our trade zone and we took some profits here, throw your stop over this guy and then just stop out of it if on the runner if we do happen to come back here, which is what happened. If you are in from the buy over here, again, you're sitting pretty. I would recommend taking profits, especially if you haven't done so at the target. Definitely take your profits, and I think a stop under here would be fine, like under this structure over here, so like roughly 80 82.6, let's call it. For your runner, I think that would be very reasonable because this is a local daily demand zone, and I would not walk that stop again unless you get some more demand and then a breakout. Okay, fine, then we'll walk it up. I don't like walking it up just on the lows because the lows can get taken out, but if you don't take out structure, then it's really no big deal. Like for example, if you were a seller over here at the highs and you're just walking your stops down on every single lower high, so you walk it down, walk it down, walk it down, walk it down, you get wicked out here before this big leg down. Whereas if you were waiting for these structures to print and then break down, your stop is here, you don't touch this, you see all of this, and it's only when you see this breakdown again to know that this is now supply, and then we walk it down. This has been a big change for me, and it's been a very good change. Because honestly, getting wicked out of a trade and then having it continue to work is like one of the most frustrating experiences, I would say. Anyway, lots of space for a daily high or low. I don't really care about this rinky-dink one. I would say anything over 83088.02. Technically, there's another rinky-dink one here. But again, I really care about these structures. So for me, the key high or low is 83088.02. And this is, of course, on Coinbase. So again, you should be stopped out of this sell now. And if you're a buyer, you should still have a runner, and the runner stop can be under there. Moving on to Ethereum, I'm okay with this sell still. I still think that Ethereum is showing you so much relative weakness. The Ethereum BTC chart is still just making new lows here. So I still think this is a pretty reasonable sell. This is so much overhead supply that I would be surprised if the sellers don't at least make an attempt at trying to defend all of this supply. So I think that's pretty reasonable. I think the weekly time frame we are looking, this is like a little rinky-dink weekly lower high to 2104.21. Again, that's what this play is for, either a lower high or like a pop and drop over that level. Again, I would be pretty surprised if the sellers don't look to defend all of this supply. So I continue to maintain that's reasonable. That being said, the daily chart is bullish. Space for a higher low, technically it's over this guy. Anything over 1723.01 would be good for one. But again, I really care about this area of demand. So that's it. I don't suggest a buy in Ethereum, right? Like if you're looking to be a buyer in Ethereum, I would say wait for a lot of follow through over 2045.61. That's the point of control of this structure over here, which was supportive of all of this balance. Wait for some follow through, pretty much a repeat of this, and then we can look for bottom fishing plays off of this structure. But until that occurs, I personally would not be interested in a buy in Ethereum. Moving on to URA. So if you recall, last week we were talking about how the sellers were doing what they had to get done, playing defense off of this key level. This is the point of control of this structure over here, which has been problematic for buyers here and here and here. And then it was supportive for buyers over here and over here and over here. So the sellers were doing what they had to get done, but you'll notice where they failed. They failed at the value area low. So Monday's session, which was the high of the day, right at the point of control, essentially continuing to affirm this structure as supply, this guy as supply, was a good start for the sellers, but to drop and pop at the value area low was not a good look. And of course, this big old gap up to the value area high, and then not even seeing a back test of this, right, of the breakout point was very notable. So at this point now, I would actually flip this, right? If this becomes a stop out, so be it, because it didn't really give you opportunity for a chop here. But if we do see selling next week and you are using this trade zone, I would definitely look to start taking off some partials to lower your cost basis, and then throw your stop over whenever a local high gets set. If it's a stop out, it's a stop out, right? It's no biggie. And at this point now, I would be okay with actually looking for a buy again. Ideally, it makes presses a little bit higher, but at this point now, you can be looking for a buy like this for URA next week. I'm looking to play up to here, right? Which is what made all these lows over here. Essentially a repeat of these plays over here. Okay, lots of space for a daily higher low now. Anything over 22.12 will be good for them. All right, so like I said, I have a lot of very pretty meaty week for day time frame stuff, and I was kind of struggling to like decide, all right, well, which session should I talk about, which key ideas should I talk about, and I'm just gonna throw them all in and just let you know right now it's gonna be lengthy. So if you're not interested in that, get on out of here. No worries, and I hope to see you next time. But if you are interested in your day time frame operations or whatnot, then stick around. So for Tuesday was an RTY buy, and the key for me was really that the day time frame stuff is really great for staying in control of the trade. But at the same time, the downside of day time frame stuff is that if you're playing on the day time frame and looking for a larger move, you have to be at the desk, like and just to stay frosty for, that's what I like to call it, stay frosty for the next play, because oftentimes when you're doing day time frame stuff, your location is not ideal for the bigger picture. So your day time frame trade might work, but the bigger picture thesis might not be invalidated even if your day time frame trade is stopped out. So let me just talk about that a little bit here. So for RUT, I had my caps lock on by accident, but at 9:31 I buy the open, I buy the new high and the stop under the low of the day, and that's just over here. That's on Tuesday. I was out on Monday. Nope, that's too far back. Let's see here, Tuesday. So I just bought this new high, and I was looking for a chop at the value area low, the 417 value area low, and that's over here. So Tuesday is here, and I was just looking for an exit over here, because remember that every single session is just trying to either affirm or negate prior sessions. So if we're going to affirm this session as demand with this big old gap up over here, then the next places where these buyers should have problems, potential problems, is the key levels of the next session, which is the value area low and the point of control, and then eventually the value area high. And you do have problems at the value area low. We pop and drop there, don't see acceptance over it, and then eventually you stall a bit at the point of control as well before these buyers continue to press the event. So let me just walk you through it a little bit more. So chopped it up at the 417 val, and then I was looking for more out at the end of the day structure from 417, and I was just looking to position play for a runner here, and then because it's a very aggressive buy. And the reason why it's an aggressive buy is because if you look on the daily time frame, Tuesday is this session over here, and we're already like kind of off of the lows for a bit, and so I didn't really love that location. I'm very far from the higher low, and I also recognized that because it was a higher open, it was almost a gap up as a higher open, that we could get invalidated here, right? And if price moves all the way down to here, these buyers would still be constructive. So because the open was so high, I knew that the location might not be secure, because again, even if we continue to sell off, if we're holding over this value area high over here, then these buyers would have been okay. So I didn't love this kind of aggressive location. So I was just looking to get my risk off, get paid a little bit ideally for the attempt, and make sure that if I were to stop out, walk away with something. And so that's what I did. At the end of the day structure was just this guy over here. So I just took another exit here. So an exit here, an exit here, right? Buy the new high, exit here, and then I believe I stopped out the rest while I was eating my breakfast oatmeal or whatever. And so out rest, looking to walk up the stop for the rest, and then I stopped the runner while I was away. And at 11:02, I acknowledged that there were a couple of really super cheap 1 minute SS plays, but I just wasn't here for them. And That was over here. So that was like here. Like over here, right? For example, that was really juicy. Even this one was really juicy, right? Like this 1 minute stair step here, it's so cheap. 1.5 points or so of risk just to play that stair step break and then look to play it up to the depot. It's like, you know, a 2 hour trade, and that wouldn't have stuck, but that's fine because again, you want to keep playing with these buyers as long as they're holding over this session. And you'll notice that the buyers, the sellers, I should say, never even took out the opening range of Monday, right? So here's the Monday's opening range, right? And so again, if these buyers are going to affirm this session as demand, then the best case scenario would be for them to just hold over this opening range, which is exactly what they did. So because these lower lows were not seeing that much follow through, I believe that, you know, I'm of the opinion that these 1 minute stair step plays were really juicy. This one in particular, incredibly juicy, right? Because this is no risk at all, just to buy this 1 minute SS break, knowing that we're still affirming that yesterday's session as demand. We have a lot of space to work with. Just playing to get to the developing value area low is 1.7R. To play to the depot is almost 4R. To get to the diva is 6.7R. And so that's the key point of Tuesday, right? Is that you know, if you're going to do day time frame stuff, looking for the daily moves, right? Because again, this session was affirming this session on the daily time frame from session to session, I should say. As long as you're holding over this guy, you have to just be at the desk, right? You had to be at the desk this whole time. And I don't eat breakfast. I usually break the fast. I mean, it depends on, technically it's breaking the fast, but I eat a very late breakfast, like 10:30 ish or whatnot. So I'm usually getting pretty hungry by around 10. So I missed this. And because I missed this period of trade, I don't get to have this, right? I only got a little taste over here, which obviously when you trade futures, that's more than enough. But anyway, that's Tuesday's primary idea. And so moving on here. Oh, right. And then so I also want to talk about the climbing the wall of the worry, right? So it demands a lack of acceptance within local daily demand. So I'm just reminding people, hey, listen, we're still bullish and we are affirming this idea of the market climbing a wall of worry as long as the selling doesn't negate any major breakout. Actually, yeah. All right, so for Wednesday's trade, let's see. For Wednesday trade, in the beginning it was not great, and so I ended up making some mistakes. It was I was doing the rut again, and on this session I was looking for the new low in RTY. Sold the new low in RTY, looking for a back test of the opening range. And at this point now, the daily chart was a big old gap. And so after we had rejected from this level, I was thinking, okay, sellers are going to try to control this session, and we can probably play to try to get back to these key breakout points, right? This guy and this guy, the point of control of that key 2020 structure, and then of course to the daily no change level. That was my idea at least, but I was a little late. So I made this post at 9:55, and I was kind of chasing it a little bit. At 9:55 was over here. So I just sold this new low. So I see this. The best location sell would have been, remember that this just happened. This just happened. This made the high of the day. And so the best location then would have been here, right? I could have just sold that pass back under. Even the diva would have been reasonable, but selling this 1 minute stair step after that clean rejection, that clean pop and drop at that daily level, it could have been right here. And so the next best location would have been here, the pop and drop over the depop, and I hesitated there. And so I ended up being kind of late chasing it here. So that was kind of a red flag for me, right? Like that's not something that I like to do. If I don't get the best location, typically I'll just, let it go or whatever. And that was the first red flag. And whenever I throw out a red flag like that, I like to bring attention to it because I don't want to keep stacking up these red flags because I'm not being sharp, right? And so I don't want to keep operating if I'm not being sharp. Futures are a very, very leveraged product. And so if you're not being sharp and when you're trading a super leveraged product, bad things can happen very, very quickly. So, excuse me. So, I pointed out, I kind of chased it. I pointed out right away, I kind of chased it. And I just said, hey, listen, that's a red flag. And then I forgot about data at 10, and that was caused this high volume over here and this wickiness. And I had a little wiggle room, and so I was still in the trade, but I got sussed out by it. And I said, you know what? There was 2 red flags because I forgot about data, and I just had my finger on the trigger to bail on it because it was a notable miss of backtesting the opening range. This guy over here. right? So here's the opening range, right? And they failed to touch down on it, and that kind of sketched me out. I psyched myself out and I exited it break even. It was actually a little loss. It was like just roughly break even. And then I put myself in timeout and I acknowledged I psyched myself out of a nice one. But it's probably better in the long run getting out flat when you're stacking up errors. You know, like Daniel will only do two. He'll only make 2 attempts at a trade if they don't work. So if he has 2 attempts that don't work, he's done for the day. He puts himself in timeout. Now that's not what happened to me specifically, but making 2 mistakes like that, especially the chasing one in particular, I don't normally do that. That's not a thing that I do regularly at all anymore. It was a problem before, for sure, and so that kind of had me concerned that I just wasn't firing on all cylinders. So I just acknowledge that, and that's pretty much it. So I should have been prepared to sell. Yeah, that's it. There's a rejection from. Okay, so this does become important. This point over here, I just thought it was worth mentioning. So this says that the rejection from the high of the 415 session should have sellers trying to negate the 416 session next. So the 415 session is this. Let's see. So we're on the 23rd right now, and the rejection. Oh, I think I was talking about NQ at this point. So we're on the 23rd, and we rejected from the highs of the 415 session over here. So here's the high of the 415 session, right? And again, this is Wednesday. So we rejected from here. So what should they be trying to do next? Then again, every single session is trying to either affirm or negate prior sessions. So if we're going to reject from the high of this guy and then drill lower, what should they try to do next? They should try to negate this guy next. And so I was just pointing that out as like a key reference. And the low of the day for that session was pretty much right at that value area low. So this is just an idea that I think is very important to constantly be cognizant of, right? What is the market trying to do? It's always trying to either affirm or negate, always. That's just how it needs to work, right? Because the market's always trying to find the fairest value to do business, right? It wants to find an area where everybody agrees that this is fair business and then fair price to do business, and then there's the most transactions there, because that's what the market's designed to do. The market is designed to distribute goods as effectively as possible. If you think about why we have markets, it's so that we don't have to barter, right? Like when you had to barter for goods, that was really hard. I had to be like, hey, you have a goat. I need a goat, but I only have a cat, right? Do you need a cat? Are you having a mice problems or whatever? What, you don't need a cat? Okay, what about a cat and a blanket? Is that enough for your goat? And that's how people would have to do business. It's crazy, right? And so once we had currency, right, you can go to the market and then just trade currency for different goods. That allowed for there to be more transactions. That's the whole point of the market. And the financial market is no different, right? It's always just trying to find the points of price where we can do the most business, where everybody can do the most business. Right, that context is why I ended up doing this trade later in the session, because this notable miss here. So because these buyers missed this touching the value area high, that gave me confidence to make an attempt at the NQ pass back over the deval. That was at 153. So for, let's see, NQ here at 153. It was over here. Here's this guy. I remember this guy. It was this guy, right? So at 153, I said, hey, listen, I bought this pass back over the deval because at this point we were looking for a 5-minute higher low, I believe. Let me just go to a different chart so we don't mess it up. Yeah, we're looking for a play over here, right? Just looking for this higher low play over here. And so I said, okay, I bought this pass back over the deval. My stop is under the local low. I was looking for an exit over here, the low of this local supply, because if these buyers are going to have problems, then the first place where they should have problems is right here, right? So I say, okay, well, I just buy this deval, stops under here. I'm looking for a chop at 921. So that's 921. And stop under local low. I chopped it, and then I looked for more out at the open, because again, the next place where these buyers should have problems, if they're going to have problems, is the open, and here's the open. So pick up another, I don't know, another like 30 points or so on one contract. Picked up, I don't know, like 40 points on two here. So that's already like 100 points. It's again a pretty solid day already. And then stopped out the rest off this little lower low here. And I have no problem with that. Oh, I was walking up the stop, but Either way, I have no problem with that because if you recall from the prior videos, what I've been focusing primarily on is shorter duration stuff, shorter duration, day time frame stuff, and I really haven't been looking for home runs, and that adjustment has gone really, really well because, again, really solid week, like decent five-figure week for just base hits, just a few base hits. It was like 4 base hits throughout the week. Again, it's a very leveraged product. So that was Wednesday, and then for Thursday, so I pretty much went 4 for 4 last week. I didn't trade Monday. For Thursday, the key idea was something I talk about all the time. Was when something that shouldn't happen, when something that should happen, I should say, doesn't. That's always very, very notable. So on Thursday, and I admittedly got the worst buy on Thursday. I got the worst one. So Thursday, this is the ES, the SPY. This is the NQQQQ, and here is the RUT. And so you can see the RUT had the least amount of follow through, but it was still a banger trade. And the reason why I selected it was because that's where the daily references are. Remember the prior videos I've been talking about, like my greatest edge is when I'm trading off of daily levels. So I'm really just been focusing on trading off of, primarily at least, been trading off of daily levels. So I was thinking, okay, if you don't touch the regular trading hours low, right? RTY, notable failure to touch down on the regular trading hours low. And then, a second later, I bought that pass back over that point of control. Because on this day, that was this day over here, right? So this day over here, Thursday, we moved lower and the sellers failed to get to the low by just a tick, a very notable failure. And so I was confident that after seeing that failure and also seeing ES and the NQ being strong, I figured RTY probably a bit of a laggard. I just bought that pass back over the point of control, and I was looking to play to the value area high. And so, wait a second. I'm sorry, that to the daily value area high. So I was looking to play from this point of control to this value area high, right? And the risk on that was very good, So I was happy to do that. And let's see, looking to chop at the highs of yesterday, midday balance, and add back a break above. I forgot about data, and so we didn't get to my first chop target, and so I was just, I was looking to exit before, so I just moved the target down to where the TPOC was, and that was just let's see here, to where the Deepak was yesterday. So it was over here, right? So I was looking for the exit over here. I did get that chop before data. I got it right before data, which was nice, but data was pretty much a non-event. And it led to actually more buying, so that was fine. And let's see, I just mentioned that I picked RTY because I had clear daily levels, although I could have just used day time frame references to trade the ES and NQ probably. Okay, chopped it, holding one, blah, blah, blah. I just walked it up. I just started walking it up, and then eventually I stopped it out the RTY runner at 312. So pretty much captured almost the entire move of this day. The stop out was like over here. On this move down, I had my stop over here, and I just stopped it out. So, really didn't leave that. I caught the majority of this move here. Again, just the key idea here was something that should happen that didn't. And Dan even talked about this in the in our chat room afterwards, which is always nice and affirming. But yeah, he talked about the same thing when something doesn't happen. And what his point was a little bit different, right? It's just that the sellers were positioned so well in the ES and the NQ. They were positioned so well at the low of yesterday to punch it home and potentially set this daily high, and they failed, and that was a notable failure. So always feels good when Dano agrees with me. And that was pretty much it. And then for Friday, I don't have all the information available. I don't have all the information available because the context of it all was set up. Hang on a second here. Was set up during the morning stream. Again, if you're interested, check out our community. We do a live stream every single morning where we just talk through the open, and sometimes we'll do trades. It really depends. If there's a setup, if it's juicy enough, I'll go for it. If the environment's great, I'll go for it. But sometimes I'll pass if it's like kind of tricky open. Right? It's something that I would be okay with if I didn't have to talk through everything that I was doing and do analysis for other tickers. I would have been okay with that. And I was originally looking for a pair trade, but I realized that the context of the pair trade would have been kind of challenging because we opened up right here at the low of this daily overhead supply. So I was thinking, okay, let me do a pair trade, a buy in the NQ and a sell in the RTY, because the rut was opening up here. The rut we opened up under the supply from the high of the day in Thursday's session. And so that was relatively weak. And I was thinking, okay, we can set up a sell off of this guy, which honestly worked out fine later in the session, but I ended up not doing it. And I thought, okay, well, it's going to be hard for me to do a pair trade and do analysis for other tickers. It's just not what I normally do, right? What I normally do is on the morning, I do my morning rundown for the futures room, and I'm super focused, and I just have to do this. That's it, right? But when I do the morning stream for the community at large, then we cover all these tickers, and then we cover tickers that other people request as well. So it becomes a lot to juggle. I didn't want to do a pair trade, and the context I realized was not great, right? Because if we're going to open up right at that area of change, and I said this during the morning stream, there's probably going to be some congestion here, right? And there was congestion here. The beginning of the session is this hot mess over here. So I was happy to avoid that, but I also said, because we're going to avoid the morning pair trade, which is likely to be challenging because of this potential chop, which did end up being very choppy, I did say, however, that if we break out, I would be interested in a higher low afterwards. And so that's what I ended up doing on Friday. And I guess the print's kind of small, but I said I was interested in a potential 15-minute higher low. And the reason why I mentioned the morning stream is because it's really important to think through the whole trade, right? And you shouldn't be making any decisions when the trade is actually on. Your edge should be the same every single time, more or less. All of your edges should, I like to say, rhyme. All of your trade edges should rhyme. Like, you should know exactly what you're going to do in this kind of context all the time. And so what helps you to prepare for that, right, to execute well, is to know what you're going to do beforehand. Think as far out ahead as you can to prime your brain to get ready for that thing. It's kind of like visualizing, right? Like visualizing what's going to happen, right? It's like if you're getting an argument with you're going to get into an argument with your partner or something, you like game plan it in your head, right? If she says this, I'll say this, and that is not the best analogy, but like you be more articulate when you're communicating. Let's frame this in a more positive way. You guys are going to have a constructive conflict here, and you know what your key points are. You also know what your mistakes were, so you're ready to throw this all out there, such that when you guys do come together to talk, it goes much smoother. So that's the idea, right? You want to prime your mind, and you want to outsource essentially as much thinking as possible, pre-plan all that thinking, so that you don't have to do it during. It's very, very powerful. And my best trades are the ones where I call out way ahead of time the context, and I already know how I'm going to go about it, based off of the few edges that I trade. I really only trade like 3 setups. So and I know I always pick which setup based off of the context. So all of that is already kind of ready for me. I just need to think ahead to, okay, what is exactly the kind of context that I want to see in order for me to make that play. So the morning stream, I talk about this. Okay, I'm interested in a higher low play if we can break out, if these buyers can make advance beyond that daily no change of the daily low of key supply, that would be notable. Then I would be interested in a higher low. And so that's what I do. And later on in the session, it takes a long time because we balance for a long time before finally breaking out. And I say, okay, listen, there's space for a higher low now. I'm interested in that potential 15-minute higher low. Might not be enough time for it. We'll see. That's at 120. Then some news hits about, I don't know, something China, something JPOW. I have no idea. And that's what this high volume was. And I said, okay, at 147, it's all about the breakout points, and the context is like a scalpy, take risk off kind of context, given we're already a few days into the bounce. We're like 4 days into the bounce, a lot of headline risk. We don't really know if there's going to be follow through. So I shake it all out. I'm talking about it. Ideally, we'll see some lower lows through the diva, like follow through. I would not be too interested if it drills right through the diva. So I want to see like choppy action coming down into the diva. And then I would like to see lower lows like follow through, and then the diva continue to essentially meet price, right? I would like the diva to be as close to the low as possible to not only set up a low risk setup, not only to create a low risk setup, but also so that I can be as close to the pivot as possible. The further away that I am from that pivot, the less confident I am in that location, right? So at 203, I said, okay, I bought the pass back over the diva for the NQ, and that was under the 1 minute higher low looking for 58. So that's over here. At the end of the session, it was this. So here's this high volume selling due to the news. Here's the developing value area high, the diva. I wanted to see lower lows through the diva like follow through, which is exactly what shakes out, right? Lower low here through the diva, not very little acceptance. lower low, very little follow through, lower low, very little follow through. So I kind of hesitated, honestly. The better play would have been here, and I think Mark got that play in the ES. So shout out to Mark, nice job. The better play would have been here, stop under here, and then look to chop it up like here. But I played this one off of the diva because the diva is really the key. That's what I care about. As long as buyers are holding over the development value area high, they're moving value higher on the session. And this was so cheap here. It was a super, super cheap buy. You buy that pass back over the diva. It wasn't a perfect buy by any means. It was something a little bit off of it. And then I was just looking to chop it up at 448 first. And then I didn't love the location because this is off of the low. So I can get taken out of this and the trade could still work, which is I think what happened. No, it's not. I just I walked the stop up and got stopped out. But if the sellers, right, were to take this low out, take this low out here, right, take out this low where my stop is, but then not take out this guy and then continue to rally, that would have been technically sound, and it would just been my bad location, which is why I got, that would just been my bad location. So I didn't love that location, but it was very cheap to find out. And so I took that shot, and I was just looking for a piece of candy, a little day trade, whatever. And I said, I don't love the location because it could still be constructive over the morning balance. As long as we're holding over this structure, there was no problem for these buyers. And so, again, I was a little late to it. So I was looking out for more under 466, 466, and I missed it by a smidge initially, but then I eventually do get it. Yes, chop under 466, and then I walked the stop under local daily demand at 236. So that was just over here, walked it up, and then I think walked it up again, and then we just stopped it out. So that was it. Again, I know this is a super long video because there was a lot of review, but I went 4 for 4 last week, and technically 4 for 5, right? I meant 4 for 4 sessions, and just want to showcase, that especially if you trade futures markets, you don't have to go for home runs. It was pretty much a home run week just by racking up singles. So that's it. I won't bore you anymore with any more babbling, but if you made it this far, thank you. I really appreciate you sharing some of your time and energy with me. I hope you got something out of this video. If you wouldn't mind hitting us with a like and subscribe, that would be very welcome. It helps us out a lot, costs you nothing. And that's pretty much it. If you're interested in the swing report, which, if you're busy during the week, you don't have time to scout trades or work screeners or whatever, then check out the swing report. It's me and Dano will give you an update on the market every single week. I will give you 2 fresh trade ideas again, so that, let me scout these trades for you. Any trades that I do take, I will post live updates for them. Same thing for Dano. Do realize that, contextualize everything, because I have a lot of trading operations, so I probably don't focus on the names that many people would prefer to focus on. But again, I give you these levels, just like in the NVDA trade, just like for the Bitcoin trades, the dollar, all of these trades in the beginning of the video. I'll give you 2 more novel ideas for stocks that you can trade as well. And yeah, just try to help you simplify your process. And if you're just learning the ropes, then seeing those play-by-plays, I think, is one of the best ways to figure out how to trade using this type of analysis. So that's it. Again, appreciate you guys sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I hope to see you all next time. Farewell.